The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 29th. Terrific Thursday, New Year's Eve Thursday, so to speak, because this is the last show of the year for us. But it is nonetheless going to be a great show, a great Trader's Edge show. I'm your host, Stevie Perseverance Rhodes. And I absolutely know that each of us should always be pioneers of our future versus prisoners of our past. Make sure that one gets in your New Year's resolutions out there. Hope you're having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. So let's go ahead and get this New Year's Eve edition show started. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow traded off 22 points at 19,811. S&P down 3, trading at 2247. NDX 100 off 13 points. Street's trading at 4913. NASDAQ Composite down 14. Russell 2000 off about 1 7/10. So, anywhere between a tenth to maybe 0.3% to the downside. New York Stock Exchange, I don't know if that feed is correct or not, so we'll just simply skip over that. Gold is a correct feed, up $17. Silver's up 17 cents. Light sweet crude back 23 pennies out there. Leading the charge the upside, AutoZone. It's in the zone, up $3 or about 0.4%. Equinix up $3, trade out at 357. Randgold Resources up 4%. Mobileye up 8.7%. Agnico Eagle up 6%. Royal Gold up 4%. You got gold up all over the place. To the downside, well, it would be that Dusty thing. Not Dusty Rhodes, but Dust, D-U-S-T, the Direction Daily Gold Miners ETF. That's off about 11 bucks or 20%. Amazon is down $10. Chipotle down $8. Tesla's off 4. So you can always send me an email, steve@tfnn.com. Of course, my phone is not on me. That's okay. I'll just check my actual emails to see what emails may have come through. They come faster. They come through faster on my phone, believe it or not, than they do on my email system. But send me an email, steve@tfnn.com, inside the Tiger's Den. Go ahead and ping away, because I'd like to take a look at whatever it is you would like to look at as well. Now, we did have an early pinger out here, actually an early emailer. So for Pradeep, let's go take a look at a couple of the equities that were requested. The first one is called BL, Blackline Inc. Now, this is a daily chart. This looks like an IPO out here. I don't know anything about it. So Pradeep, we don't really have a ton of information. It's only really traded since October 28th out here. And the only real information that I would have to say that would be available to us right now might be these TAS market profiles, albeit just a few of them. So here is what we know about this equity. Number one, not traded heavily. 179,000 shares is at the swing point from November 29th. That got up to a high of 28.77. That area was tested on 104,000 shares. So lighter volume back on December 21st. Of course, we're kind of in that light volume share type of time frame out here, so it's hard to really say whether there's a whole lot of meaning here. Here's what I would say to you. As long as this trades above 25.89, maybe this wants to set up an A to B equals CD to the upside. You got to take out, or it's got to take out, or you want to see it take out that November 29th level with 179,000 shares. More than that, and then you've got a to B equals CD to the upside. If it closes below 25.89, test figure price pulls back to about the 24.58 level. Let's go take a look at BLBD. BLBD is a ticker symbol. That is Bluebird Corp. Now, in the case of Bluebird Corp, a equity that is very thinly traded. What do I mean by that? Today, 16,000 shares. On average, looks like this does about 33,000 shares. So don't be careful. Make sure that if you're in this, that you know that getting out of it may not be the easiest thing to do. But if we take a look at this equity, we're going to take a look at it. I really should do this too. Let me switch over to a different set of charts so I can go ahead and type in on the daily just to see what else is out here. BLBD. See what pops up. Here is what I'm just looking to see as it made this high out here. And this is trading right now at about 16.35. So this equity here, here's one thing that we know. When it was making this high, this is back on the trading day of December 13th. It was moving higher, doing less relative energy out there. Nothing that you really like to see, especially when it gets confirmed here on December 15th with a bearish engulfing candle. The very next session is a TD9 setup. Price is trading below the oscillator and change line, trading below TAS daily profiles. This wants lower price. Now, where is that lower price going to take us to? Well, let's go see if the swing point yesterday was of an A to B equals CD to the downside was passed with volume. December 19th, 47,000 shares. Yesterday, 31,000. So you've passed the swing point with lighter volume. Nonetheless, you still want to draw in the A to B equals CD pattern out here because the 1-to-1 takes you into about the 15.15 level out here. And if we go ahead and we delete that, we can see at about 15.11 happens to be the weekly TAS profile point of control, the center of that box out there. Bluebird ought to move down to about 15.53. Yeah, green candle today, but it's an inside day. It means the existing trend is intact. So I would anticipate 15.53 to 15.11 out there. The last one for Pradeep is going to be UNG. Of course, if we're going to trade UNG, we really should go take a look at what's going on with the current natural gas contract. So we'll do it both ways out here. Let me go ahead and get that current natural gas contract. That would be what? February, I believe, February 2017. So as we take a look at natural gas, well, son of a gun. This, too, has been moving higher, doing less relative energy out here. You can see that by that black line going across my screen. Looks very similar to that Bluebird chart. We have an inside day here. As long as the natural gas contract, this is the February contract that we're looking at, is able to close above and stay above Stevie's oscillator and change line, the red line, $3.70, then you know what? Prices can continue higher. In fact, they should continue higher. The existing trend should be in place. You get below 370 out there, then that says, probably head down to the most recent swing point from December 20th. So what should you do if you're inside of UNG? Well, what we can see that it has done thus far, it's got a brand new TAS market profile. Of course, you know that I prefer on the to take a look at the underlying contract versus the ETF for data, but I'm going to give it to you anyways. You don't really want to see this close below 928. Otherwise, it looks like you are in a good long trade. That was for Pradeep. Thanks for sending an email. When we get back from this break, we're going to go to Chicago and speak with Robert about Procter & Gamble. Steve Rhodes will be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. Happy New Year to you.
Cover a topic. Two topics. One was Proctor, but the other one was that a reminder to the folks that are going to wait till October 15th to invest their money. Rather, they should do it in January sometime. Does that still hold? Can you just review that?
Yeah, absolutely. So here's the if we take a look at what the stock market does on average, okay, and that's what we're talking about here. Let me I'll pull this forward here. If you're watching us on TigerTV, the stock market, now this is based on 84 years worth of data and taking a look at the Dow, actually 85 years worth of data now and taking a look at the Dow. And the Dow typically forms a top sometime between December 30th, so this week, and January 6th. And, you know, whether it's tax selling, who knows what it is, the market just basically, the Dow itself typically forms a top in this time period. And then it moves lower into about the January 30th time frame. Sometimes it's a little bit earlier in January. Sometimes it's a little bit early in February. But right around that time frame, that should be, so for those folks that are taking a look at those individuals that have their own individual retirement accounts that usually hold off till April, it's the absolute worst decision that you can make, because the April 15th, as an example, if you wait till April 15th, the stock market typically makes a top between May and July. Typically, we see a top in May, around the middle of May. We end up seeing that level get tested right around the middle of July before price moves down into October. So October is another nice time to go ahead and make an investment in the market. But the one that you are referring to, or the one that I also was just talking about with you, says, hey, what do you do with those retirement funds? When do you put them to work? You would be amazed over a period of 50 years, 40 years, 20 years, how many ever years it is, especially for your kids, if they just made that one simple decision, if they were going to be in an aggressive, index only type of investment. out there, just how much more money they would have in their account by doing it on January 30th versus around February 15th. April 15th.
Perfect. Thanks very much for reminding me. I try to keep track of all that stuff. You went over it with me last year, so that's wonderful. And
yeah, no problem.
How about Procter & Gamble? It's been hanging around this 84, 83 area. Do you think it might pop? Not pop,
I tell you.
I'm sorry. Longer term, yeah.
Go ahead.
Yeah, so longer term, I'd want to see this go up towards 93 again or towards 96.
Yeah, longer term. So if we just take a look at longer term, if I just put up a annual chart, a yearly chart here for Procter & Gamble. So here's the yearly chart. Let me turn up some market profiles just so that all of our viewers, listeners can get a feel for it. What Procter & Gamble did this year is it opened at a price point of $78.36. It's trading right now at $84. So not a substantial movement, I would say. So 78. Right, what did I say? The open was 78 to 84. What are we dealing with there? $6.
Yep.
So 9%, 8%, something like that. Okay, not too bad. So not a ton of movement out here. That's what the yearly looks like. The quarterly chart, if we just see what has gone on in the quarter, what you're going to see out here, Robert, is you're going to see this huge stiff wall of resistance in this 91-ish area. In fact, on a quarterly basis, back in October 2014 was when it made its all-time high up at 84.02. Then the very next next quarter, I should say, taking us into December 31st of 2014, had a bearish reversal signal for the quarter. Price went ahead and moved lower. And this quarter right now, as we go into this December time period, I have no idea whether it's coincidental or not, but as we go into this time period here, we actually have like a key reversal bearish engulfing session. So, does this mean we're going to go test and if I look at just a quarterly, which you and I, we don't do that often, but if I look at the quarter from July that began July 2015, the top of that was 82.55. There was volume of 649 million shares. We've already tested that. We've rejected it, or it's rejected it, but it's testing it with more volume. So you have already 747,000 shares testing 649. This would say to me, just typical swing point volume analysis, that Procter & Gamble wants to go back and test that area at some point in time again. If I look at a monthly chart out here,
that area would be 82.65.
If I put it would say at least the top of 82.55, at least the top of that. So now I go just simply because you mentioned long term. So if I go from the quarterly now down to the monthly chart out here, what we know is that the test of the highs, which was December of 2014, which had volume of 142 million shares, was tested with 846. So that's good. That was a nice test out here. But, boy, you had a nice bearish reversal signal in October. Follow through last month. And this month is not on a monthly basis, is not giving us a lot of hope out here. So now I go back to the daily chart for you. And on the daily chart, what it really says, Robert, is the test of the lows will occur in Procter & Gamble, or that area you and I were looking at, if we see it close below its oscillator unchanged line, this red line out here, which is priced at, looks like somewhere right around, we won't need to be exact, but 84.09 would be the exact number. If it closes below 84.09, then this doesn't look that great as far as it moving to the upside. If it does stay above that area, then what you want to do, are you in this, or you're really looking for an entry area?
Yeah, I was thinking about entering it.
Yeah. What you really want to do is see it be able to take out December 14th. Which has 12 million shares. Last time we were up there was 5 million shares back on the 23rd. Of course, how do you really calculate volume during a Christmas, New Year's time period, right? Because December 23rd, how much trading was really going on. But nonetheless, there still was not enough volume to push through it. So I don't know. If you're gonna go ahead and take a long entry into this as we speak today, I would just say, let's go back to the first question, in essence, that was asked. And we took a look at the Dow, of which Procter & Gamble is a portion of.
Right.
And we know that the market's going to make a high may have already made that high yesterday or 2 days ago,
Sure.
or it makes it right around January 6th and moves lower into the end of January. Why don't you circle your wagons at the end of January to take
Right.
a look at Procter & Gamble as
Yep.
opposed to, we haven't seen any reasons to say, yeah, we ought to take a long trade in Procter & Gamble right now. You know what I mean?
Yeah, sure. So I'm looking for the 8409 close underneath that. You came up with that number when you were looking, I believe, at the monthly or quarterly chart. So,
Daily. I was looking at a daily chart there, and that daily chart, I don't know where I threw it out here. That's
okay.
what that does, Robert. A close below that tells me that the price oscillator has turned down, and when it
Right.
turns down below zero, that's the very bottom portion of my chart.
Yeah.
When it turns down below zero, the implication is, and I'll use the word bearish. What I really mean is it's sellers that are in control.
Sure.
And the quarterly, the yearly chart, everything kind of suggests that in Procter & Gamble, it's the sellers in control.
That's
Alrighty.
perfect. That's perfect, Steve. Thanks for both of the answers and great analysis.
My pleasure. And have a happy
All
New
right.
Year. Be safe out there. That was Robert in Chicago. That was Procter & Gamble. And let's take a look at it in January, the end of January. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of our viewers, listeners writes in, I now have a very large profit in JNUG and Nugget. I've moved up my stops and am wondering where you think these two can run to. I do not like keeping these triple triple ETFs over the weekend, but in this case, I'm thinking that may be a good idea. Any thoughts on my long-term play here? So let's go take a look at J Nugget. What I'm going to do for you, Tom, as well as obviously everybody else, is really just walk you through a number of different elements that could impact the mining trade and or the metals trade out here. That way you can consider it. But to answer your question specifically, because you're kind of a short-term, long-term trader out there, and you said specifically I have a very large profit in the junior nugget and nugget, and you don't like carrying them over the weekend, why not take all your principal off the table and then just simply have a free trade in all of that, and you will rest easy peasy because it ain't going out of business. It's not going to zero there. So one thing to consider, I'm just utilizing the words that you used to say, hey, what is a really nice option for you? And that option is take back your principal. You've got free trades. Let them run, regardless of what Stevie's going to give you during the next several minutes here. With regard to J Nugget, JNUG, now this has a nice, if we were going to say to ourselves, what are the most powerful candlestick formations, either bullish or bearish, you and I would put island tops and island bottoms at the top of that list out here. Now, our preference is to find the individual stocks that have that versus an ETF, but nonetheless, it still works with ETFs. It's just much stronger with regard to the individual stocks. If you want to see what I mean, just go take a look at JP Morgan, and you'll find the island bottom. That was Jamie Dimon. It was sayonara, see you later, all-time highs. Can that happen in the anything can happen. Here's what occurred today inside J Nugget, an island bottom pattern. It is, you really have to pay attention in order to be able to identify it. But if you go do the work and you take a look at the gap to the downside on December 14th, the low there, 535. And if you take a look at the high yesterday, 528, there's still a gap there. And then the low today of only 531. Yes, 3 pennies makes a difference in the whole world out there. You now got an island bottom inside of Junior Nugget. You can't get anything more bullish than that with regard to a candlestick signal. Where will price go to? Well, you just come take a look at this gap to the downside. This would be your first resistance level out here. That's at 1485. You're at 644. Math says that's another $8 or so to the upside. Can you get that? Yeah. There's absolutely no reason that inside the junior nugget that it won't target that area. If I take a look at our market profiles, we'll go ahead and do that. Just turn those on out here. This would suggest that price is going to head to 695, then 872. But I would say more likely the target is a 1485 level. That's in the junior nugget. If we go take a look at the nugget itself, right, that's the other one that you've got. What this did as well, did the nugget, no, the nugget did not have an island bottom formation. That doesn't matter. But the GDX did, which is really kind of underlying instrument of this. But in the case of where is nugget headed to, we'd really say the same things. First, with regard to TAS profiles, 963 is an area of resistance. If it gets above that, then that says the logical gap to the downside, we'll go paint in that picture for you, is where NUGT will head to. And at first, the top of that gap, in essence, really the tie of the session from October 4th is 1606. You're trading at 845. It's another 100% return out there. Will it happen? I don't know. I think that it will. And we'll go take a look at the other piece of evidence. But having free trades here, Tom, come on. You can party like it's 2016 for a couple of more days out there. Now, what are the other things? Yeah, but it's really the Danny Analytics. Really, as I say, it's the GDX, right? You have. Do we have the GDX? No, I guess we don't have a. Yeah, we do have an island. We have a nice island bottom inside of GDX. That island was formed on December 27th. But really, when you take a look at the top holdings inside of GDX, it's really Barrick Gold, ABX. That is the one that formed that out here. It's got a nice island bottom. So, Barrick Gold should be headed to the moon. By the way, its moon out here, first lunar landing, ought to be the November 2nd area up in the 1895 area. But nonetheless, if we take a look at the things that really are impacting, directionally speaking, gold metals, I should say, you and I would take a look at what's going on inside of the Japanese yen. And this will really give us our answer as to what's going on here, because this is trying to make a form a change in trend out here. And if this forms a change in trend, and as long as the correlation remains intact, there's no reason for us to believe otherwise. What you're really looking for, what the yen futures are doing as we speak right now, is trying to take on its TAS daily profile high, 0.86295 to be exact. It doesn't have to be today. But if it's tomorrow, if it's Monday, Sunday night, Monday, when this is trading, while we'll all be watching football and wondering, why did we actually have that last drink last night? Or something along those lines. But look, if here's the point. Let's just get right to the point. If you get above 0.86, the daily profile high out there, that's going to indicate a change in trend. That's going to say that price is going to run up to 0.87559, the weekly. And then if you get above that, major change in trend. Now, the reason that we take a look at this, Tom, and everybody else, is just simply because of the directional correlation that you and I know exists between this, the U.S. Treasuries, the whole kit and caboodle out here. So everything looks pretty good. But it has run into resistance. So this says that it could pull back, which could impact your mining trades. But there's a lot of work that's going to be done in the currency market, between now and really next Tuesday. Of course, you can trade those tomorrow, but really next Tuesday, so again, free trade or hold them. Do the old Texas hold them because, everything looks pretty good. Now, a couple other things that could impact this, right? U.S. dollar. They got the U.S. dollar pulling back today as well. Of course, the yen being a portion of that. If we take a look at what large commercial traders are doing inside the U.S. dollar index, if you look at the bottom portion of our screen takes a look at the CFTC data and compares what the open interest, takes a look at what the net short position of commercial traders, large money traders out there, gives us a feel for what they are doing. Where everybody believes that the U.S. dollar index is just simply headed for a northern star out here, then why is it that these guys, big banks, others like that, why is it that they keep upping their net short interest as a percentage, or the net short position as a percentage of open interest? They're headed in the opposite direction with regard to where it is they anticipate the U.S. dollar. And now, we can't use this as a timing tool, unfortunately. But we've got these other elements that are timing tools. Island bottom patterns, the yen itself with regard to its directional correlation, volume, right? We've got plenty of oscillator on change line. We've got plenty of elements out here that we can use that then just solidify this and say, no reason to be, if you believe that the U.S. dollar index is going to correlate with regard to the direction of gold, man, there's a large group out here that is saying the U.S. dollar index is going to pull back, let alone these large commercial traders here of gold are moving to becoming less net short. That's the center panel on this chart. Steve Rhodes with TFNN. Tom, you've got a good trade. You've got choices.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go to Mike in Toronto. Mike, thanks for calling. Thanks for holding. How are you doing today?
Hey, thanks for taking my call.
Sure, my pleasure. Now, you're calling about the Dow Jones Railroad Index, which is a symbol that I'm not that familiar with. So, is there a? And I'm not sure how to actually pull it up without doing a bunch of some research. I mean, I will real quickly. But is there an ETF that you use to trade that off of? Because that might be the easier.
I'm using that index to sell short CNI.
CNI. Is it okay if we just go take a look at CNI then, and we'll give you the swoop?
All right then.
Yeah, okay. So CNI, that's going to be an easy thing, and which is Canadian National Railway out here. Yeah. And have you already taken a short position in this, or tell me what you're doing? Okay,
I am,
all right.
And I'm slightly underwater. But I'm not sweating here. The reason why I thought that if we could look at the railroad index, for guidance, but if you can't pull it up, sure, give me your thoughts on the weekly versus the daily on the CNI.
Okay, so as we take a look at CNI, we know that it had this nice little gap down out here on December the 12th with about 4 million shares. And that was after, maybe completing an A to B equals CD pattern out there. It really come back to, I don't know that it fully completed. I'll draw that in for you. But here was the pattern out here. Let's see. Just, it was close, but no cigar. About 71.19 would have been the completion of that pattern. Regardless, though, you did have a nice gap to the downside, which took place, as I said, on December 12th. And then that gap, in essence, was tested on December 13th. And since then, we've traded sideways. Mm-hmm. So in trading sideways, here's what you really want to see as far as your next move to the downside. And that is you want to see this take out that December 15th level, which has 978,000 shares, because then that would give you your A to B equals CD pattern to the downside out here. Now, whether it would make a 1-to-1, a 1-to-1.272, we'd really have to see along the way. But your targets would be 65.05, 64.11, 62.93, something along those lines. Now, you mentioned the weekly, so we'll go take a look at the weekly. But give me the target. So when you went short this, do you have a targeted area that you believe this is going to head to?
Okay, well, the reason why I bring up the weekly is that I've looked at it over the last 2 years on the weekly, and it seems to always bounce off a Bollinger Band. Okay, and you coordinate that with a 200-day moving average. I don't know. What do you think? Maybe 60, 61?
Well, let's do this. Let's go put up the Bollinger Band. Let me see where I've got that. Are you using just the standard Bollinger Band intervals out there? You are, okay.
Standard one, yeah.
Yeah, okay. So as we take a look at that, it's outside the upper portion of the Bollinger Band. You know that the first target in this becomes the midline, which would be about $65 out there. I would say that if you were to see, now this is on a weekly chart that I've got it on. By the way, if you were to see it get below the first price point that you and I looked at, which was 66.58, chances are that this equity would run down to the weekly profiles of 62.55 to 63.38. You know, that in essence is really what you're looking for. By that time, if let's say your prognosis is correct here, and that you've seen this pattern, what probably occurs at that same time is the Bollinger Band is moving up into those TAS market profiles. So I would say you would be watching that 62-ish, 63-ish area on this trade out here. Now, on a weekly basis, the swing point that you and I are taking a look at is April 18th, and that's got 5 million shares. And when it moved above that, really close, because the week of April 18th, 5.5 million shares, and when it spiked higher the week of December 15th, it had 5.3 million shares. So in one sense, you really need this to get back. You know how Tom uses the phrase, the lower range out here? You really want to see this thing get into the lower range, which would be below that April 18th high out there, 66.22. Because if it doesn't, it's an A to B equals C to the upside like you and I first took a look at out here. On my other charting system, Mike, that I use to look for other types of topping patterns that are in play, there's nothing that actually shows up. The only thing that shows up on the daily chart out here that says, okay, stay with the trade, is that the price oscillator has turned down. And that price oscillator is priced at 68.24. That's the oscillator and change line. That means as long as price is below that, the bottom panel of my chart is actually turned down, the difference between the 19 and the 39-day exponential moving average. So, you know, it's a sideways move. That's probably not what you wanted to see, but it is what it is.
Mm-hmm. Okay.
Does that help you?
It does to an effect. I still think we're heading to somehow, some way. It likes to touch the weekly Bollinger Bands to exhaust sell-offs and to exhaust rallies.
Yeah.
So.
Yeah. Well, then you've at least you've got that. Okay, so now I put it on the daily out here. Of course, if you're using the daily Bollinger Band, it says 66.41. It becomes your target, because that's really the bottom of the daily Bollinger Band out there. But below that, Mike, the 62.55, 63.38 level. The other side of the good news, I don't know if the rails really follow along with the seasonal cycle of the Dow itself, but we're going into that unfavorable seasonal cycle where we should see the markets pull back into the end of January. So seems to me like you're on the right track here. You don't want to see this thing really close into the 69. The specific price point would be you'd like this to not close inside 69.25 and do it with more than 1.7 million shares. That would then say this is probably headed higher.
Yeah, my stop is the all-time high, 70.
Okay, yeah. So it sounds like you've got it nailed, and Happy New Year and the best of luck on this trade for you.
Thank you very much. Bye-bye.
You bet. That was Mike in Toronto, and that was Canadian National Railway. Now, we haven't talked about really the markets per se here, so let's go take a look at some of the things that we want to pay attention to. And I think one of those things that we want to pay attention, we're going to go to the daily. So this way you can be paying attention to tomorrow and the meaning behind, what price is doing, where things are headed. I'd say the one area that you're going to want to focus on is going to be the NQ out here. Now, this is a daily chart for the NQ. And on the pullback right now, it's pulling back into the top of its TAS weekly profile, which is 48.97. That should be support.
The actual low so far today is 49.01. 48.97 is the number to watch. If, in fact, price closes below 48.97, not all is lost, but all is lost if you see it close below 49.61. That happens to, I'm sorry, what the heck am I saying? 48.82. Let me give you the exact numbers. Write these down on a pad of paper, because if you see it close below the weekly top of the box, the daily bottom of the box, which is 48.82, then that says that the correction has started, that the high took place a couple of trading days ago on December 27th. This is one area that you want to watch. The Russell 2000, which has also been strong like bull, right now this is saying if today it closes below 1359, this wants to head to about 1340 as its next move. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we were looking at the daily equity futures contracts for the NQ and for the Russell 2000. And what we know is that prices pulled back is trading into a level of support, an area that should hold. Now, at the same time that that's going on, I'm shifting over to the Dow here because it's the Dow that it really has given us the potential of one of the best signals in a strong trending market that this retracement, which has been pretty shallow, but still a retracement nonetheless, and we've got plenty of topping signals out here. I just hate when they occur during the last week of December, but that's kind of normal. But if we stay on point here, if we take a look at the Dow since the move down yesterday, let me get my crosshair out here. Since the move down yesterday morning at 9:30, it was basically a sell-off right out of the gates out here. We have now, or it has gotten to a seventh wave move, letter G to the downside. And it did it with that miraculous, and not so miraculous, but it did it with a nice hammer candle. In fact, as we speak right now, 155, we have the second hammer candle that is forming, could be forming, down here at these bottoms. Man, that is communicating to you and I that something is trying to hammer out a low. So you have the NQ back to a level of significant support. You have the Russell 2000 trading just slightly below a level of support. But remember, I have a 10-minute delay on that Russell contract out here. And you have a nice seventh wave move inside the Dow 30-minute chart out here. And as long as that letter G, this took place at 12:30 today, doesn't get taken out, meaning it closed below it, and we have a hammer candle, we already have the hammer candle there, then that says that you should anticipate a bounce today/tomorrow. And I won't be here with you tomorrow. What does it mean if that area gets taken out? Well, back to the Dow equity futures contract, because it's really not down to a level of support just yet. So its level of support, if that seventh wave, if that hammer candle gets taken out, I would say more likely than not, odds favor a move down to 19,592. You're trading right now at 19,751. Out there. So you're looking at about a, give or take 200 points, right? 200, somewhere in that vicinity out here. That's what you would expect. And if price were to get below 19,592 for whatever reason, you're then looking at 19,418. But here is what we know right now. Price in two of the strong indices, is down at a support level. And now, if I look at the NQ on a 30-minute time frame, it's only made 6 waves out here. So even though the NQ is moving lower and the Dow is just kind of hanging tight out here, you could get that seventh wave move that forms inside the NQ joining up with what's inside of the Dow out here. Same holds true with regard to the ES. By the way, the support on the ES out here is the 2234 level. And if that area gets hit, it's also going to form, I can't say that for sure. It's only in way, it would form a seventh wave move to the downside as well. So pay attention to those because as you and I know, they can often be points where the market reverses. Why? I don't know. I just know that that's the way that it works. And when those bullish configurations, and when they fail, as you know, there's nothing more bearish than a failed bullish pattern. So that's really the wrap-up for the day. Dow's only up 20, not much, but it's important to understand intraday what patterns are out there, what to pay attention to as things look right now. We know with the yen futures, if they continue moving higher, we've just seen the beginnings of the movement inside of the mining sector. That also means we've just seen the beginnings of the movement inside of the 30-year Treasury out there. So that covers your TLT type question with regard to should you be in it. Longer term right now, the answer is yes. Short intermediate term, the answer is yes. Same as inside the miners. So folks, have a terrific, safe, happy, healthy New Year. Hard to believe it's a new year. It just seems like yesterday we were saying, I don't know, happy Valentine's Day. But we'll see you in 2017. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.